Let's talk more Tesla with Tasha Keeney of ARK Invest and Steve Wesley of the Wesley Group, also a former Tesla board member. Welcome, both of you. Steve, I'm trying to figure out how you get out of if you're Tesla, you get out of a price competition, cheaper Chinese EVs situation by, through price cuts and a cheaper car that has aspects of the current platform. What's the optimistic scenario here, Steve, that you see?
Look, you've got to get a $25,000 car out to market. And let's be honest, this was a terrible quarter. Year-over-year decline in Q1 sales haven't happened in 4 years. Poor Cybertruck numbers, increasing competition from BYD, Hyundai, Kia, 40% decline in share price. It doesn't get much tougher than that. On top of this, Elon's putting huge amount of pressure on the big August 8th robotaxi event. And my gut is, anything less than an earth-shattering news on full self-driving and no 25K car could trigger a sell-off. Right now, Tesla needs to focus, and they need to get dates for bringing that new $25,000 car to market. If they do that, there's a lot of silver lining out there for them.
Tasha, your price target on Tesla is more than 10x up from here. So what is it that convinces investors in this situation that Tesla is worth that?
Yeah, well, let's talk about earth-shattering. I can't think of anything more earth-shattering than a car that drives itself. And I think that's exactly what people should be focused on. So, yes, our previously published price target was $2,000 per share by 2027. We're updating that now, so look out for that research. But we think that 2/3 of the enterprise value in that year could be attributable to a robotaxi network. To ignore this is crazy in my mind. I think that this Tesla will be one of the greatest AI companies of our generation because of this. What's important now is we're hearing, that they're investing in compute. They're mentioning in the letter that, compute research is up 130% for the quarter. They'll continue to invest in compute. We want them to do that because the way that they have tuned the full self-driving neural net architecture is such that, they have this amazing data set, millions of cars on the road, over 2 million miles of driving data per day to train from. And, for a while they were compute constrained, and that's not the case anymore. So basically, new problems arise and they just need the compute to solve it. And now they're have that, or at least have line of sight to having that. I think that's huge. So I'm super excited for the robotaxi event later this year.
Okay. Steve, I mean, to even get, let's put the regulatory approvals that are going to be necessary aside for a moment. To even get to true autonomous driving and the realization of this on a mass scale in a way that's potentially financially meaningful for a Tesla, how much hinges on the fact that you need a lower priced car, you need scale, more vehicles on the road to fully deploy full self-driving and to fully realize software and services?
No, you and what Phil just said is exactly right. Robotaxis will be the biggest deal in the world, but that's 5, 10, 12 years out. That's just aspirational talk. Tesla's got to figure out what they're doing for the next 3 years. And the short answer to that is the $25,000 car. Drive a Tesla, full self-driving. It's extraordinary. And Tesla and Waymo are the leaders. Let's give them credit. But they're at maybe 98, 99%. Before you have full self-driving robotaxis, you have to be at 99.9999. That is years out. Tesla's got to fill that gap. There is some silver lining here. Look, they still control 51% of the EV market in the United States, more than all other companies combined. That's great. They're dominant in Europe. They have work to do in China. That's why they're bringing prices down. They control the charging network, largely in North America and Europe. All other automakers are gravitating. They're going to use Tesla's network, and I don't think Tesla will be bashful about raising prices there. And their energy division is growing at record rates, $6 billion last year, should be at $10 billion by the next couple of years. And there are a lot of talk about their new out-of-box manufacturing process that could cut costs another third. So lower battery costs, better manufacturing, some silver lining, but they're going to have to scramble to get through this next 3 years because full autonomous driving and robotaxis ain't going to be here anytime soon.